เอาละค่ะในหัวข้อต่อไปเราจะมาฟังทิศทางของเศรษฐกิจโลก World Economic Outlook นะคะว่าภาพรวมในช่วงต่อไปจะเป็นอย่างไรนะคะและผู้ที่จะมาให้ข้อมูลกับเราในช่วงนี้คือมิสเตอร์ชีวงลีนักเศรษฐศาสตร์อาวุโสนะคะจาก Mitsubishi UFJ Morgan Stanley Securities ในเครือ MUFG ประจำกรุงโตเกียวนะคะก็จะมาวิเคราะห์ข้อมูลให้เราได้รับทราบกันค่ะ And now, ladies and gentlemen, I'd like to warmly welcome Senior Economist of Mitsubishi UFJ Morgan Stanley Securities, Mr. Chiwoong Lee, to tell us more about the world's economic outlook. A big round of applause, please. ขอเสียงปรบมือดังๆต้อนรับคุณลีค่ะ
สวัสดีครับ It's such an honor for me to be able to speak in front of all of you regarding the world economic outlook. I'm Korean. I used to live in Japan close to 20 years, which is long enough for me to be a pessimistic person. My conclusion will be very cautiously pessimistic that the world economy is not actually growing in a trend where we want it to, and we will have to be very careful about the world economic growth going forward. Keyword to understand is going to be a protectionism, which I may not want that to happen, but the reality is we are getting close to that part. So let me try to give you the overlook of the world economy as a whole, and then try to go over each major nations which might impact Thailand economy's export going forward, which of course will mean a lot to many countries. So to start out, I will start with the word which is a keyword we actually use a lot these days. So economists used to make up a term which to describe the world in a short sense. Of course, you may not be able to read the very small fonts down there. That's just for your notes later on. But please try to focus on the charts you see. If you take a look at this chart, this is an OECD composite lead indicator. There are several trends. The blue line is OECD members, which is developed countries, while red line, which includes BRICS, Indonesia, South Africa, so it kind of represents the most of the countries with the developing countries. You can see the trend starting from 1960s. Oh, by the way, this is the OECD lead indicator, which you don't really see usually. It's a trend-included version. Usually you use trend-discluded version, but the trend of the world seems to be trending down initially from 1960s to 70s, and then 80s, there is a great stabilization. And then since starting from recently, as you can see here, that the trend is actually downward, which was actually put down by the Summers saying secular stagnation, which is happening in the world, which is low growth, low inflation, low rates, which is continuing for years now. But of course, if you can see, the Japan, where I'm based on, seems to be a leading indicator of this secular stagnation of the total world. So actually understanding Japan is quite interesting in terms of understanding where the world is going. Let me try to be more specific about the secular stagnation a little bit. If you divide the GDP growth rate into three parts, number one is the high-income nations, where the per capita GDP is more than 12,000, and the middle-income nations above around 1,200, and the low-income nations. You see the growth rate during the 1980s, which is here, stabilization. High-income nations' growth rate is actually trending downwards. It actually did not accelerate, but the acceleration was given by the middle-income as well as the low-income countries. So let's think about what's happening here. Our world, actually our life did not change much since 1980s, where everybody was watching TV, everybody was riding a car, and there are trains to ride on. We have an airplane which is flying at a similar speed than past. All those things which developed countries used to have nowadays are trickling down to the nations whose income getting higher are coming to the point where they can actually achieve those consumption level, which has been the major driver for the growth. So it's not the advanced countries who are actually leading the world growth rates, but it was more mid to low-income countries which are driving. But what was the cause behind the world growth rates behind that? Of course, there is a relationship between them, which is being related by the trade. You can see 1980s, where the world advanced countries' growth rate was trending down a little bit. The trade was growing at a very accelerated speed. Now it started from 1980s, going up, and then it started from 2000. As you know, after China joining WTO, the growth of the trade has actually accelerated. There was a major drive of trickling down, or maybe a catch-up of the technologies, or even the consumption demand of other countries toward the developing countries, mainly coming from China and other countries to follow. However, I think we are in the world where the trend is changing. You know, our world, which has been accelerating the growing in terms of the size, was actually using some of the main principles of the economics, which is division of labor, as well as a comparative advantage. If the market is large enough, as you remember from the Adam Smith, it is a good thing, or even you can increase the production by dividing the labor, one person doing one thing, the other person doing the other thing, combining together will give you the better result. But it was of course Adam Smith who didn't miss the critical point, saying that the division of labor is being limited. It's going to be limited by the extent of the market. If the size is small enough, you do not need a division of labor. How many people need like more than 100 cars? If the market size is small enough, what I mean is division of labor is not required. You just need to do it by your own self, and actually there's no need to expand what you're doing. When you do the division of labor, of course, there's another principle of the economy, which is a comparative advantage. Comparative advantage tells you just do whatever you are good at comparatively, and then exchange whatever you come up with the others, so that the outcome of the total is going to be greater. So China, known to be as a low-wage country, used to be doing, so what you call in your country, I guess, is Thai 2.0, where the light industry was being used with the low technology, with the low wages, and then exchanging to the industrialized countries, and then gives you the larger result. There was a world, actually, what we are seeing. So the global economy was heading for the expansion of the market, which gave you the further division of labor and the better usage of comparative advantage, which led to an efficient usage of resources, which actually led into an increase in output. That was the world we were facing. However, I remember the days in 1929, when, of course I wasn't born then, but as I recall, there was a time when the protectionism came, started by the United States. They actually introduced something called Smooth-Hawley Tariff Act, increasing the tariff, and then you saw many countries following that trend. What they did was to aggressively protect their country, blocking the trade, so that no nation within a short term can benefit out of it. The result was, you see a huge downtrend of the trade, starting from 1929 to the shrinkage of the world trade. What we are seeing today reminds me of that. Because the world trade, which has grown so far, and then starting from 2000, we had the global financial crisis, and after that, there was a stability. But starting from 2014, what we seem to be seeing is the similar trend what we saw in the past. Is it true? Are we going into the world of protectionism? Or are we going into the world where the world trade is going to be shrinking? Maybe. Because the latest, for example, exports data of many countries seems to be trending downward. you see some signs of protectionism. One sign can be the tariff. There is no updated tariff data after 2012, but the trend here shows you tariff which had been coming down gradually is now up only a little bit. This may look like a noise, but if you count the number of countries, how many countries have raised their tariffs since 2012? Out of 7 countries, which I was able to count, 50 countries, which used to be around 13, are increasing tariffs on average. In 2013 to 14, you see additional 42 countries are increasing tariffs. Who's starting that? I'm not sure. I'm not sure which one is faster. Lower growth is leading to this, but you see there are many political dynamics which are changing. I'm not here to say who's going to be the next president of the United States or many other countries, but you see many presidents who are coming in to protect your country for their own goods, but they may not be beneficiary for your country's longer-term growth. I'm not sure. But there seems to be a bit of a sign of the protectionism which might happen around the world, which is a bad thing. Because protectionism will be having a different circle. If you have a smaller market, there is no need to do the division of labor. Less division of labor leads to a worse usage of comparative advantage, and then inefficient usage of resources lead to a decrease in output. But still, the world seems to be going into that direction. If you think about the exact example, I'm not here to say whether China is doing the dumping policy to the steel prices. But we all know that the prices may be a bit cheaper, but I'm not here to judge that. But US has started to impose duties or tariffs on Chinese steels, 266%. Following that, maybe, on my understanding, China is trying to, they actually prohibited imports from the US about the beef. Seeing that, United States is now, it started an investigation of dumping policy of China's washing machine. Washing machine? Washing machine? That is what happened to Japan in the past. When the washing machine's quality is so good and the price is so cheap, US companies felt really threatened. That's why they had to start collaborate with the government to stop the huge aggressive imports from China. So what's following after that? It's not only China and United States. 2 days ago, Nikkei newspaper had an article saying that Japan is actually following the trend of China, trend of United States to try to start the investigation on the dumping of the steels from China. And many other countries are actually following, which will lead, of course, to the less trade volume of the steels. But for countries who don't produce steels at all, what's bad about lower prices of steel? So we have to think about this dynamic, which is a negative dynamic might be coming from protectionism, which will lead to a lower trade of the world, which might mean lower growth of the world going forward. As I said, it's a very cautious, pessimistic view of the world. I hope it will not happen, but it seems a trend currently it seems to be going into that direction for at least this year and next year. And if the politics will change in many countries, like what's happening around the world, then this might accelerate. What about TPP? Trans-Pacific Partnership. Isn't it a freer trade? But you have to understand the fact. Why has TPP started? It started mainly because WTO failed in terms of Doha round. It will be very beneficiary if you can have more friends within the circle, but because you couldn't reach an agreement between many countries, what you had to do was to form a smaller group and then come out with the agreement on that. But if you have smaller group, what you will be having is that, of course, the largest country will try to benefit it the most other than the smaller countries. So I guess the benefit which might be coming from the TPP is going to be much less than what you can expect from what the WTO or the GATT in the past has used to achieve. So I hope I made you enough pessimistic, hopefully, just trying to be cautious. But let me try to summarize 5 points regarding each nations. Given that I only have 10 minutes, I'll try to speak really fast. Maybe not. So there are 5 questions actually I asked myself. What are the important questions actually I received? I was in Malaysia, I was in Singapore 3 days ago. Within 2 days, I met like 20 clients, which was crazy. But it's okay. Those are the questions I think I talked with the investors, hedge funds. First, what about the US Fed hike? Is it going to happen? How many times? Number 2, China. Is it going down? How much? Is the GDP reliable or not? Number 3, what about yuan? Chinese yuan is such a big thing. 4, what about the negative interest rate? What's happening? What are the impacts it will have? And number 5, Japan's Abenomics, of course, because I'm from Japan. Of all the regards, I will be pessimistic. Number 1, US, what's happening with the United States? See, I'm accelerating because I don't have time. US potential growth rate, which used to hover at around 3%, now are being calculated at 1.4. Do you remember economists saying 2 years ago, 3 years ago, if you ask them what is the potential growth rate of the United States, they all said 3 to 4. After 1 year, they said 2 to 3. Now they are saying 1 to 2. That's what happened in Japan in 1990s. And after 10 years passed, Japan came to realize potential growth rate, which used to hover at around 4, was only less than 1%. That's what seems to be happening. Still, the Fed is trying to do the hike. Why? Because the labor market condition is increasing. I'm not here to actually predict whether they will do the hike, how many more times. But here is the indicator you might want to watch, whether if you want to get it right for the Fed's hike going forward. This is the labor market condition index given by the Fed, Kansas Fed, which gives you the total picture of the employment situation, which seems to be improving. And you saw last December, we had a hike. The timing was quite easy to predict by taking a look at chart. And actually, I was right. Hope thanks to the chart, you see the past trend. When the Kansas Fed indicator passes from minus to positive, they usually started a hike here, here, and here. So if you are kind of draw a line showing when is it going to be turned positive, you could actually tell when they are going to do the hike. If this trend continues, they will just continue the hike because the Fed's objective is to maintain the maximum employment. And inflation is not critical these days. But you also notice every time it turns down, you see Fed starts to cut. So if you ask me 3 months later, 4 months later, I think June, July hike is just there. It's with a high probability. What about December hike? If you ask me after 3 months to 4 months, I will just refer to this chart. If it's going up, I'll just say there's going to be a hike. If it's not, I'll just say probability is getting lower and lower. Okay? So I just want you to take a look at this. You can actually download it through the Kansas Fed, the Fed webpage. And this is the indicator you might want to watch, whether you want to take a look at the Fed's hike or not. Number 2, China, GDP, 6%? Really? Nobody trusts it. Even the Chinese friends of mine, who's a good drunker, also doesn't trust it. Why? If you take a look at this chart, GDP, which is more or less flat at around 7%, if you take a look at GDP, you will never be able to understand why the policy makers in China, PBOC, the central bank, has to lower their interest rate. Economy was actually doing okay. They still lowered. You can actually predict it by taking a look at the GDP figure. What are the things you might have to watch? According to the Chinese Academy of Social Science, it is industrial production value added, which the policy makers are actually being more sensitive about. So if you take a look at this blue line, you can easily imagine that the economic condition is actually getting worse. Because the economic condition is getting worse, you just had to lower the interest rate. That's what's happening in China. And they also said they cannot trust GDP. But there is their own usage of industrial production. If you multiply it by 0.7, that gives you GDP, and they trust it more. What was industrial production last year? It was 6.1 multiplied by 0.7 gives you 4.27. So 4.3 is the real growth rate you actually have in China. What about this year? Government has a target of industrial production as well. Last year was 6.1. Their target in 2016 is 6.0, which is lower. Their target is lower. Can they come above that? I'm not sure because of the SOE reform they have. So the real growth rate in China seems to be going down at around 4.3. What about Chinese yuan? Depreciation. You are the big boss. You become the one big country. You are in a deceleration phase. What are you going to do? You will just say, maybe depreciate the currency. But of course, you don't want to say it because the FX market is being decided by the market. I'm not here to judge whether the Chinese government is trying to control Chinese yuan. But if you take a look at this longer chart of dollar Chinese yuan, appreciation down, depreciation above, it's a policy differential of the US Fed as well as the China's policy. The term is different, but that's okay. You see, the main reason why yuan is depreciating, which we ask any Chinese people, that's because Fed is doing the hike, China is doing the cut. Rate differential will lead Chinese yuan to depreciate. Simple. And you see the trend of the chart. After China shock here, there was a prime minister came in saying that there is no fundamental reason for Chinese yuan to depreciate anymore, so it appreciated. But starting from November, it depreciated so much. Why? Because the Fed is doing the hike. And now, you are in May. After January, after the market crashed, you saw Prime Minister came in saying that there is no fundamental reason for Chinese yuan to continue to depreciate. And now we are in May, where the market is trying to price in the Fed hike. What's happening? Chinese yuan depreciation. And I think the same trend is going to continue. Depreciation, stability, depreciation, stability, as long as the Chinese growth rate to decelerate. And this deceleration is going to continue at least 2 years. Why? Because they are doing the SOE reform for at least 2 years. Why? Because they said they're going to be using the 100 billion Chinese yuan to support the people for at least 2 years. There's a time where they will be having in terms of the restructuring of the country. So, lower growth, yuan depreciation, what you might want to see. And yuan depreciation is quite dangerous. Because in Japan, what's happening is that Chinese people, more and more Chinese people are coming, but the amount they are spending is actually going down. Why? Because Chinese yuan is depreciating. You see, more and more people can come, but the amount of they spend may drop when the yuan depreciates. And also, as China has 15% of the world's GDP growth rate, if yuan depreciates by 10%, world growth rate can just be calculated as 10% multiplied by 50% is just going to be off. Because when you add the world GDP, you have to translate into United States dollar. See the impact? 10% depreciation, 1.5% GDP growth rate cut, given that the IMF is expecting 3.2% growth for this year. Third, negative interest rate, what it did and what it didn't. What it did was because of the negative interest rate, which is lower and lower, it impacted market-related things. Market-related things regarded to housing prices, like here. That's the timing of the negative interest rate. You saw the housing prices went up. And also housing mortgage loan rates went down. Euro stopped appreciating. So the price-wise, it was okay. What it didn't come was the real economy. Although the rates were lower, people did not increase the housing investment. Although the rates were lower, investment in terms of the corporate borrowing did not go up. Price fluctuated, real economy was stable, which is what happened in Japan. I think that's what's going to happen to Japan as well. But you will have one more factor which is negative. Well, of course, I don't have time for it. And what about Abenomics? One thing Abenomics did was Japanese yen depreciation. Okay, Japanese yen depreciation, hoping exports to go up. If you see the trend of the export of Japan, China, Korea to United States, exports of each country has to pick up when U.S. economy picks up. But if you see the trend starting from here, China, Korea, and Japan, and this is the period starting from 2013 to now when Japanese yen depreciated so much. Why are they not exporting? Because although the price is cheaper, I see nobody holding Japanese handphones anymore. They are not producing the ones you want to buy. That's the lack of innovation. So of course, I'm hoping that the innovation will come true and Japan will have somebody looking like Steve Jobs. But it seems it is very hard a task. And given that the export demand, which is the world economy, is shrinking, I cannot really be optimistic about Japan as well as the world in the end. So I hope I gave you enough pessimistic story, but as I said, I'm a pessimistic person. You have to take that into account and try to live your life with a smile, and thank you very much for your time.